Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to Uncontested Investing. I'm Tim Harridge. Thank you so much for stopping back by. Today's going to be difficult. I have one of the most argumentative guests we'll have all season, John Jackson. John, how are you?
I was about to take a drink too. All right, good. I'm doing great, Tim. I don't know which of these 18 cameras.
Just talk to me, John. Talk to me, John.
I don't look at the camera, to be honest with you.
Sorry. Then that's your camera over there.
All right, I got it.
If you want to talk to a camera. Even though I'm asking you how you're... See, we already have to edit the first, 30 seconds out. So, John, take a minute. Tell that camera a little bit about yourself.
Yeah, hey, I'm John Jackson. I'm known as the king of lease options. I've been doing lease options specifically in single family since 2003, actually. And most of those were here in Texas. So with that, then I became known as the Texas Lease Option guy after Texas, had some adjustments to the laws in 2005. And in about 2009, became a educator and got into the guru space and been doing that since about 2009.
Very good, very good. So every week, the first segment is the bottom line up front. So like you said, you don't watch or listen to a lot of shows. You're busy, and so many of our audience is. So what I like to do is just give the guest up to 2 minutes to kind of tell the audience the most important things that you feel like in today's market people should be doing, focused on, avoiding, just in general. You got up to 2 minutes. You're almost summarizing what we're going to talk about for the next half hour.
Okay.
You good?
Yep, let's do it.
Go.
So I would say right now, the most important thing to focus on is creative real estate. A lot of people just aren't that familiar with creative real estate or how to execute it properly. Creative real estate is like what I do, lease options, subject to, seller finance, wrap notes. You've got to learn and understand creative finance. If you don't understand creative finance, you're going to be, you could be in big trouble. The wholesalers are having a lot of issues right now. I would hate to be a rehabber right now, to be honest with you. I've never rehabbed a house, but I was around in 2008 and 2009. And those rehabbers and even some of the builders, they were hurting as their margins came down. So creative real estate, lease options, seller finance, subject to, become very well versed in those methodologies because the sellers need you. And that's another thing right now. You need to understand how to listen to what the seller needs. I say be the doctor in real estate. When the seller's telling you what is going on, what their situation is, take notes. And then you, as the real estate investor, hand them the prescription. You're saying, based on what you're telling me, here's the prescription I'm giving you. Now, it's not your job to make them take the prescription. It's not your job to make them go to CVS and get the prescription filled. Your job is simply to give them that prescription. Maybe they take it, maybe they don't, but you've done your job to try to help them. But again, creative real estate, you've got to know that right now in this market.
So that's great stuff. And so many people on the show in the last, I'd say 6 to 8 months, have said creative financing is becoming a new thing. I was actually talking to a member of the Investor Fuel Mastermind this morning on the way here, and he was telling me how he bought this home in Dana Point in California on the beach. Well, not on the beach, but like a block from the beach. He calls it still waterfront. Californians are different. And he's like, yeah, we bought it for $950, but the best thing was it was 0% interest, principal only payments for 1 year. So it's like $1,500 a month. Yeah. And I was like, wow, man, that's really creative. He goes, yeah, we got to come out the rehab. So I think, a lot of people have been talking about creative finance, but I thought lease options were illegal.
No, so yeah, there's a lot of misunderstanding about lease options in Texas,
right?
Anyway, and not to bore everybody with the whole background there, but it really started with contract for deed. Back in 2000, after the tornado hit downtown Fort Worth. And then all the laws about contract for deed were changed. Well, then fast forward to 2005, and Acorn lobbied with the Low-Income Housing Authority.
1823 and 629, was it? The two bills?
Yeah.
I remember.
And they changed, or they didn't change. They created laws, regulations for lease options. And the thing is that most people only read the original draft of the law, which is really more about contract for deed. But it was highly amended and highly changed before it was signed into law by Rick Perry. And really, if you go through the law, it simply states that if you do a lease option, these 5 things apply. And it even goes on to say these other things do not apply. But nobody seemed to read that. So there's a lot of confusion between lease options and contract for deed. And another part of that reason is because the laws for contract for deed, the statutes for contract for deed, and lease options are all written within Title II, Chapter 5. So you really have to dissect it and say, what's contract for deed, what's the lease option? And apparently I was the only one that was bored enough.
Well, I set you up like that because I could make a blanket statement that is, I could say it is illegal to drive over the speed limit or over the speed of 75 miles per hour in the state of Texas. And that is true on the majority of the roads in the state of Texas. But the loop around Austin, the speed limit, goes to 85 miles an hour at one point. Yeah. So I think I bring that up because having a good educator, having someone that actually was ever bored enough to read things and dissect things, it just becomes key to being successful because most people will never take a minute to can't do that. Now they go back to, their novations or wholesaling or whatever, right? Why lease options? What drug you towards that segment of real estate investing?
So back in 2003, when I got into real estate, I'd been trading stocks and options for 2 years. So I understood what an option was. So as I was looking at real estate, and there's multiple ways to make money in real estate, one of the things I found is that real estate and the stock market have similarities. First of all markets are cyclical. Secondly, you've got to find your niche. So with the stock market, you could have someone that trades, that does intraday trading, day trading for a living. And maybe they trade a transportation stock and they intraday trade it. Somebody else does swing trading and they're very good at it. But if you switch them up and say, okay, now you two trade the other way, they're going to suck at it. Right. So I knew I had to find my niche. Well, I didn't like the idea of rentals and making $150 a month or whatever, having to deal with toilets. But when I read about lease options, I'm like, oh, wait a minute. I know what an option is.
Right.
That's what I do right now for a living.
Right.
So I dove into it. And at the time, lease options were really used, or they were set up to have people fail. They were touted as, you get someone that has crappy credit, but they've got the down payment or the option fee. They come in, they put the money down. 6 months later, they can't make their payments. You kick them out. You get someone else coming in. It's great. And I'm like, okay, well, that's wrong. Right. That's a ripoff. But I thought the dynamics of a lease option, I liked that. We have a seller that can't sell or needs some help, a buyer that can't buy yet, and you bring them together with the infrastructure of a lease option. So that's where I went down that path of the lease option and started my company, Leasing To Buy.
So I'm going to take a break because I think there's a lot of meat there for the middle segment. So stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm still here with John. I'll leave the rest out. Jackson.
Little inside joke.
Yeah, very, very inside. It will stay inside too. So many back in the day when I got in this business in 2002. So many of the contract for deed or lease option folks were really loan to own. They were trying to get a down payment and then get another down payment in a year or two once the people got kicked out. A lot of times they targeted illegal aliens and things like that, people that basically they knew wouldn't come after them in court for doing shady things. Yeah. And I've always said this about all areas of real estate investing, bandit signs even. Anything you have to do at night and hope not to get caught, my mom taught me it's just not a good idea, right? Like, so we'll talk a little bit about maybe let's assume there's some naivete out there, someone that thinks they should be doing something. Could you talk about some things that people do that they may not know is wrong in the lease option industry, but they should really try to avoid?
Yeah, well, first of all, with we start with the product. The product is the house. When I go back to like 05, 06, even 07, and I was trying to see where all my headaches were. All my problem childs, they all originated from a crappy house, a house I shouldn't have been doing. And I did a lot of stuff for even HomeVestor franchisees who would rehab the house, and I'd go in and I'd be like, oh, it doesn't look rehab to me, right? And it was a little crappy $90,000 or $100,000 house, whatever. Well, the commonality was a crappy house. And so I've realized that for a lease option, for it to be successful, you've got to start off with a good product, meaning, depending on that area, $200,000, $250,000, $300,000 house, a nice move-in ready house. So people say, well, I'm going to lease option this house. It needs a new roof and the left side is gone. That's not a lease option.
Right.
You know, that's seller finance all day long. So lease option is really best for nice move-in ready house. It starts there. Then the next thing is setting the numbers right, right? People think, well, I'm just going to take my option fee and add it to the value of the house. You can't do that. It's got to it has to appraise when the buyer goes to get financed. So you got to set the numbers right. And I'm pretty sure I'm the only educator out there who teaches how to set those numbers properly so that it's successful.
Right.
And then a third thing is this, the length of the lease option. A lot of educators will teach, you got to do 3, 4, or 5 year lease options. That's not how you set a lease option if you want the buyer to buy. So we do 1 year lease options, which is kind of unheard of. The reason I do 1 year lease options is, first of all, the sellers we work with, there's light at the end of the tunnel. We're like, okay, 12 months, I can do that. Secondly, with a 1 year lease option, this buyer we bring in has to be basically ready or very close for financing. That's who we're looking for. If you do a 5 year lease option, life happens, right? Something happens to that buyer. People think, well, they got 5 years to get ready. Sure, they can get ready. No, life happens. That's what has time to happen is life. They move in, 2 years later, she's pregnant. He's not the father. Boom, divorce, whatever the case may be. And then the third thing is vetting the buyer. Most people don't know how to vet the buyer. They don't know how to look at debt to income. They don't know what to look at they don't even know what a tri-merge report is, right? There's like, oh, you got the option fee? Oh, I guess you're qualified. Here, fog this mirror. Okay, you're good, So it's all of that together that makes it successful.
Because as a lender, I get people all the time, well, I mean, if it's an asset-based loan, why does my FICO score matter? It's like, the point of my job is like to make loans. That's how we make money. They need to be profitable. I have to charge you more than I pay, and they need to be repaid.
Yeah. It's that last piece.
If I have this document that says you never pay your bills, the asset doesn't really matter to me. So, John, and I'm not in any way asking you to talk trash, even though I'm afraid you're going to, but I'm going to ask, what are your feelings about these national platforms like Divvy and Pathway and Home Partners that are doing lease options across the nation?
So I haven't dug into their business model specifically to say, okay, what exactly is going on here, but just from what I've seen on the surface, the buyers aren't really put in a good position, or the buyers was really unaware. Uneducated buyers that aren't understanding what they're getting into. Oh, you mean the price is increasing every year? Oh, you mean I'm not getting anything towards my closing, as a concession or anything like that. So I think it's just the buyer getting into something they're uneducated. Which why would they be uneducated?
Yeah, right. When you talk about a year cycle on these lease options, I find that interesting because ultimately, you know, the average homeowner moves houses. I think it's like every 7.3 years, something like that. You know, right? And the average investor buys 7 houses in that time frame. So, I think you're kind of right. Like if they have up to 5 years and they haven't exercised by then, you're really just letting them kick the can down the road to where then the odds of them redeeming are very low.
Yep.
That's interesting. What about? So I heard you say that you're really trying to show people how to connect sellers and potential owner occupants or lease option customers. But if I do that, how do I get paid?
So I get paid, or my students get paid as well, an assignment fee, just like you as a wholesale. Okay. So their option fee shows as my assignment fee. So I'm getting so any of the houses I have a contract on, I could literally move into. But I assign the contract to the end buyer. So they pay me my assignment fee, which is about 5%.
So you do a lease option with the seller, and then you replace your lease option with the lease option.
I just same contract. I just assign it.
Gotcha.
Yeah.
All right.
So then they pay me an assignment fee of about 5%, and that will in almost every case will be applied towards funds to close at the time of finance. So it's not just gone.
Right.
Yeah.
Well, very nice.
Yeah.
So what parts of, I mean, I agree with you. I think creative finance and thinking outside of the box is very important. And I was in New York last week talking to new capital sources because I think there's a lot of turmoil in the lending industry. Just today, this morning, we found out a couple major competitors were pulling back. One in a very significant way, and I'm not going to throw names out there, but no, I won't. But we're very cognizant that you can never have too much money, right? And I look at this as a growth opportunity, right? I can capture market share and I can grow. So when you look at lease options nationally in this volatile financial climate, where are people finding success?
So I've got students all across the nation, and really, a year ago, of course, you've been in the market a long time, so I'm sure you were kind of sounding the alarm bells, 14 months ago. And I was too. I was telling my students, guys, because I teach lease options, but 14 months ago, saying, okay, now guys, I'm gonna start teaching you seller finance, right? Because this is going to be coming up more and more to expand beyond just lease option. But I saw markets start to implode across the nation, and what I look at is days on market, and so I look at total houses listed, then 30, 60, 90. I look at the wedding cake is what I call it. Total houses on market, 30, 60, 90, 120 expired. And based on those numbers, I can say, okay, that market is falling apart. And we're seeing it all across the nation. There may be some tiny little pockets, some little tiny pockets where it's still holding up fairly well, but they're still dropping their price. I just did last week. I just did a 3-day training, and I just picked a market in Florida. That's okay. Here's how I'm going to market there. Here's the list I'm pulling. Blah 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 blah. Send off text messages for sub owners, and a lot of them were like, "Yeah, I'd be happy to talk. How does that work? So they're looking for alternatives, because what we're looking at is we are the plan B of sellers. Plan A is you stick a for sale by owner sign in the yard. People come by and go, oh my God, I want it. Here's cash. Here's my wife and my kids, and here's the keys to my car.
Right.
Well, those days are gone.
Well, they're not gone, but just less.
They're far less. They're far less. So we're plan B. We're plan B, saying, hey, we can get you full price, no commission, you get cash flow, and you get cashed out in 12 months. So more and more sellers are saying, hey, you know what? Talk to me about plan B.
Well, I think that's right. And I think when I first ran back into you last year at the Investor Fuel Conference in Phoenix, that's the day I sounded the alarm bell. I was like, guys and gals, listen, because that same week is when I closed my last 30-year refi. And I was in the process of disputing the appraisal. I'm just like every borrower out there. And my loan officer, Matt, calls me and he's like, Tim, stop. You need to close on this loan. I can't hold the pricing for you anymore. That was like the last week of January last year, or the first week of February. And you look back and you're like, wow. And I got up on the stage that day. I was like, guys, this is going to be bad. Everything's going to change. Now, I no way thought rates would double in 12 months. And it was interesting when I summarized 2022 in a nutshell. Q1, most investors were kind of, this isn't going to hurt me. Q2, they were like, is that all you got? Is that as bad as it's going to get? And then Q3 was like, oh, look, the worst is over. And then Q4 was like, holy crap, we're all going bankrupt, right? It was just kind of, and now we're into Q1, and I feel like there's some optimism. I feel like a lot of the investors are wanting to get back in the market. So if there's someone out there listening and maybe they're frustrated that their flipping business is not making them enough money, or maybe they're frustrated their wholesaling business isn't making them enough money, or they're listening and thinking, this creative finance thing, this is where I need to go. Could you just give some the first, other than buy your course, the first, steps that you think someone out there listening should take to start educating themselves and getting familiar with the other exit strategies that are available?
Yeah, absolutely. So first of all, anybody out there, most anybody out there watching or listening, you're generating leads. Somewhere you've got lead generation going on. And what happens is most people throw away leads that don't fit this little box, their little buy box, whatever that may be. 70% ARV minus this and that, whatever. And everything else just goes in the trash. I say get in your trash and pull those leads back out because they came from somewhere, especially if you're doing SEO or PPC, right? Those are people saying that took time to say, hey, let's see what we got.
It's a direct response.
Yeah, exactly. So pull those leads back out and have a conversation with them. And I'll tell you this, a little bit of a sidetrack here. I think one of the worst things that ever happened to real estate was a Mojo dialer. Mojo dialers, like these speed dialers, one of the worst things ever. It takes away the conversation. It's about how many people can you dial within 2 hours. Well, that's not the business we're in. We're in the people business.
The numbers game in a people business.
Yeah. So you've got to understand that you're in a people business and have those conversations with people. Secondly, definitely educate yourself.
I would say anywhere you go, especially where John Jackson is, you should make sure that you find multiple sources for any information you find. Is that okay?
Yep. I would say, obviously, you can follow me for Lease Options. You've got Eddie Speed for notes, creative finance. He's probably one of the better people at the creative finance. And Mitch Steven is great at seller finance as well.
So we're going to take a break and come back for the Money Minute, and then maybe try to arrest John.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-vest.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harris. I'm still here with John Jackson. Get back, John. John, next is the Money Minute. Imagine there's an entrepreneur out there. This is going to be a TikTok. This is going to be a reel on Instagram. It's only 60 seconds of advice to get all month. Ready?
Yep.
Go.
When it comes to entrepreneurship and real estate, guys, the most important thing is right here. It's your mindset. I'm always working on my mindset. When I do my 3-day event, my favorite thing is the guru mindset that I teach. And there's so many things I could tell you, but one of them I love out of Atomic Habits is you do not rise to the level of your goals, you fall to the level of your systems. Got to get your systems down. Another phenomenal book to read is The 12-Week Year. I want you to get that book to look at the emotional cycle of change. I don't care what level you play at, that emotional cycle of change is psychology, and it affects all of us, and we all go through those different cycles, emotional cycles. And just get your head right. And remember, it is on the edge of destiny that you will be tried. So when you feel like the world is crashing down around you and in on you, it's very likely you are on your edge of destiny.
Well, John, that's great stuff. And I think, part of my success as an entrepreneur has been the training in the military, right? I mean, in the Marine Corps, the whole thing was improvise, adapt, and overcome. And also perspective. I mean, there's no such thing as a bad day here in this country. I mean, I've seen how bad people have it in other spots of the world. And so, but that mindset, some people don't have control of that mindset. They get in that fog of war. They feel like you said the world is crashing around them, and they give up or they want to turn. And some of us are wired that way, but I also think that you can rewire yourself.
I think going back to the mindset, I think everybody should watch Undercover Billionaire, with Grant Cardone and the two ladies on there. It's a TV show, so it has, some theatrics in it. But if you watch it from an angle, from perspective of what are the commonalities of these three people, which, by the way, they all succeeded and got $1 million business. And two of the commonalities is creativity. Creativity will beat recklessly used money every time, especially in marketing. So you got to be creative. So you're talking about, in the military, adapting, that's creativity, right? The other thing is they didn't fall back on the 6 words that kill. The 6 words that kill are the words that create our comfort zones, which is, yeah, but, if only, and what if. You never heard Grant Cardone on that show going, well, yeah, but I got to ask my wife. No.
Right.
It's success loves speed.
Yeah, but what if and what?
If only.
If only.
If only, yeah, but what if?
When I had a new Marine check into my unit and I was the sergeant, I would always bring them in, and the first conversation was 3 words. Eliminate them from your vocabulary. Huh, but, and why. Because the whole point was I need you to follow orders.
Yeah.
And we can discuss it later, right? We can come back. So number one, you got to be listening. I don't want to hear huh. Huh means you're not paying attention. But means that you're not about to follow the order. And why, you're really just questioning an order. And my whole thing was come back around. Sergeant, do you have a minute? I would like to understand the purpose behind the task from earlier, right? But that was just where I was, right? Because I had already made up my mind, and as the commander, as the principal in charge, I need to be able to trust you to, throw your body in front of bullets, right? The way it is.
Yeah.
Because you may have to protect these other 6 people. So, different, but the same, right? Yeah. You have to be decisive, and you can't make excuses. John, we're going to go into a little bit of a rapid fire segment here.
Let me prepare.
Okay. You literally just took half the segment. Anyway, 2023 rates higher or lower at the end of the year than they are right now?
Then right now they're going to be, I'd say they're going to be higher.
Higher?
Yep.
Do you think, well, let's just talk about the Fed rate so we're not confusing rates. Okay. Fed funds rate. You think it will be quarter point higher, half a point higher, a full point?
Half a point.
So you think throughout the course of the year, the marginal increase, it may go up a point or a point and a half, come back down, or it may only go up a quarter point and then another quarter point. But you think the end of 2023, we're a half a point higher than we are right now. Yep. I tend to agree with that, and I think that's actually what the dot plot shows. What markets are your students being the most successful in right now?
Houston, Phoenix, and Florida.
Do you know why?
I think because Houston, because it's so big. Well, actually, in Houston, it was a fairly strong market, but it's so big, and I think it's got so much room to grow. And as it pulls back, I think people are surprised, like, "Oh my God, we're in Houston, but it's pulling back." And so days on market go up.
So you said Houston, Phoenix, and Florida.
Florida.
That's a state. The others are cities. all of Florida? You're seeing kind of all markets?
Well, we don't market. I don't have anybody marketing the Panhandle, but Tampa, the Gulf side, yeah, Sarasota, that area.
And in what markets are you seeing that students maybe aren't having success in? Either the numbers don't work or
DC.
Yeah.
So anywhere where it's just way beyond stupid expensive, DC, they're just not getting the fish to bite.
Yeah. And how much do interest rates going up help or hurt the exit strategy that you focus on?
It doesn't. It really doesn't affect us. I mean, slightly when the buyer goes to get financed, because the way we set the numbers is, the way we look at the DTI and everything coming in, they're going to be okay. So it doesn't affect it too much.
How important is it to you personally to teach people to set everyone in the transaction up to win and to be successful?
I think that's where it all starts. Is you want to focus on helping people. You're in the people helping business. Yeah. And if you just focus on the dollar, then you lose sight of helping the seller and helping this buyer. And that's what Leasing to Buy was all about, was helping people succeed and make this successful.
It truly is. We had our company holiday party last week.
I wasn't invited.
You don't work for the company. And it truly is fun.
Wait, holiday? It's January.
We don't want them to skip their holiday with their family, so we have a holiday gala.
So it's a post-holiday.
Yeah, but we call it the holiday gala.
You know why? I know why you do that, because things are cheaper.
No.
Yeah, I guarantee that's why you do it.
We've fly saving some money in for 3 days of training.
You're saving money.
And a big black tie party. We're not saving money, John.
How many people?
A couple hundred.
With RCN or who?
RCN.
Really?
Yeah. Very important to train and to build that camaraderie, because we feel like when we win as a company, the way we do that is helping them win.
Well, enough about you. Let's talk about me.
Okay. Well, I was just actually saying that I agree with your point of helping people succeed. And when you do that, if you build your success on other people's success, it's much more solid than being predatory, which is the whole reason we all had to learn about Senate bills and House bills.
Oh yeah, I would even when we have a lease option that doesn't succeed, it doesn't come to fruition. I take it a little bit personally, even though it was I did everything I was supposed to do. I take it a little bit personally that it didn't work out, even if they got divorced or something.
Well, ultimately, that's why I filled out my owner finance notes, because once I saw how much they had appreciated, it gave me these weird, evil feelings of, well, maybe they'll default, right? Because they had all the equity, I didn't, right? And then you're like, I can't go to bed at night hoping that, the owner now of that house in Richardson, I have to foreclose on them. So it's like, I told my wife, I was like, we just got to sell these things, right? Like, at this point, they're not worth it anymore, and go invest the money. And so I hear you, like, being a good person, being able to sleep at night is very important to me as well. So John, we're almost out of time. Do you have any parting thoughts or parting shots?
I would say be careful what you watch on social. A lot of that crap is fake. Be true to yourself. Be true to yourself. Don't try to emulate and be like somebody else. Just be true to yourself, and you'll be much happier because of it.
Now, if someone's listened to this and they're not completely turned off by you and they would like to find out more about you or your companies, how do they contact you?
They can just go to leaseoptionclasses.com, and they can reach me through there. All my contact info is there. And there's a ton of free videos. You can get a bunch of documents, all kinds of crap there. leaseoptionclasses.com.
Well, man, I appreciate you being here. You good?
I'm good.
John, thanks for coming in.
All right, man.
We're out of time. Thank you for stopping by again this week. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.